Look at any standard trading screen today, and you are hit with a tidal wave of numbers, tickers, and charts. We have access to more financial data than at any point in human history, yet clarity is harder to find than ever. All of this raw information doesn't automatically translate to better investment decisions. Instead, it piles up into a wall of market noise that obscures what is actually happening. The actual challenge we face isn't acquiring the data, it's synthesizing it, isolating the meaningful signal buried inside a fast, fragmented global market. Relying on raw data alone is a losing strategy. To make sense of the modern market, we have to rely on machine intelligence to do the heavy lifting of sorting the important from the irrelevant. The advantage now belongs to whoever can filter out that noise the fastest, extracting the actionable signal before the market moves on. That is the problem Google is targeting this week by rolling out its reimagined, AI-powered Google Finance across Europe, complete with full local language support. This expansion indicates that Google is positioning AI as a standard feature for the individual investor's toolkit across dozens of new countries. How exactly does this architecture take an endless stream of chaotic market updates and distill it down to a clear, actionable signal? This rollout changes how retail investors interact with global markets, moving from passive observation to active synthesis. The first major filter tackles historical stock data. On its own, a raw line chart mapping past performance is difficult to interpret without the context driving the price action. The AI layers advanced technical indicators, like moving average envelopes, directly onto these graphs. Tap on specific spikes to find out exactly what caused the price to move. The platform does the cross-referencing for you. The result is an active, annotated timeline mapping direct cause and effect onto price history. When we shift from the past to the present, the data moves much faster. Markets for commodities and cryptocurrencies are volatile and generate a massive amount of high-frequency noise. To handle this, Google Finance has globally integrated a tool called Deep Search to synthesize conflicting, real-time news updates on the fly. This visualization shows how Deep Search processes broad questions about complex market trends. It takes the scattered reporting from various sources and organizes it into a comprehensive, AI-generated answer, complete with direct links. Instead of spending hours reading through speculation across multiple sites, you get an immediate, verified read on the current market environment. It operates like an instant personal analyst. Then there is the densest form of market noise in existence, the corporate earnings call. These are often hour-long presentations filled with jargon. The new live earnings feature cuts through that complexity by synchronizing the real-time audio of the call with a live, rolling text transcript. AI-generated insights scan the live transcript. While executives speak, the system automatically pulls out critical metrics and annotates the text. This lets investors immediately pinpoint key revenue figures without getting lost in corporate speak. For decades, Wall Street firms have paid teams of analysts to manually monitor and decode these exact calls. This feature gives you that same capability, instantly. Processing these global market signals in real time requires a massive amount of underlying computational power and intricate hardware architecture. Driven by that hardware, financial platforms are evolving from passive dashboards that simply display numbers into active, intelligent research companions. We are watching the playing field level out. The individual investor now has access to the same high-speed synthesis tools that used to belong exclusively to institutional firms. Having access to the most raw data is no longer a competitive edge. Because everyone has the data, the future of finance relies on the intelligence that turns